Good morning this Monday, the 8th of April. I'm Grady Wolf, market analyst with Bell Direct. Wall Street recovered to rally mode on Friday as investors welcomed better than expected jobs data, indicating the world's largest economy remains robust as inflation falls and interest rates remain elevated. The rally on Friday was not enough to overcome a losing week across the key indices though for Wall Street, with the Dow Jones rising 0.8% on Friday but sliding 2.27% for the week. The S&P 500 gained 1.11% on Friday but fell 0.95% for the week, and the tech-heavy Nasdaq jumped 1.24% on Friday but ended the week down 0.8%. The US Labor Department's jobs data report out on Friday showed jobs growth of 303,000 in March, which beat economists' expectations of 200,000. Wages also rose 0.3% for the month and 4.1% from a year ago, which were in line with estimates. Over in Europe, markets closed lower on the holiday-shortened trading week as investors digested key economic data. The Stoxx 600 fell 0.84%, Germany's DAX lost 1.24%, the French CAC fell 1.11%, and in the UK, the FTSE 100 ended Friday's session down 0.84%. House prices fell 1.1% on month in March in the UK, which were below economists' expectations of a 0.1% rise. In a sign the housing market is crippling under the high interest rate pressure. Across the Asian markets on Friday, markets closed mixed as South Korea's Kospi index soared 1.29%, while Japan's Nikkei ended the day flat and Hong Kong's Hang Seng ended the day down 0.18%. Locally on Friday, the ASX 200 posted its third loss over the holiday-shortened trading week, ending the session down 0.6% as local investors were spooked by comments out of the Fed indicating rate cuts may not happen this year if inflation remains sticky. GQG Partners bucked the trend on Friday though, with the asset manager rising 4.1% after posting its funds under management climbed to $143.3 billion as at March 31. One Aussie dollar is buying 66 US cents, 99.62 Japanese yen, 52.07 British pence, and 1 New Zealand dollar and 9 cents. Ahead of the first trading session of the new trading week locally, the SPI futures are expecting the ASX to open Monday's session up 0.5%, tracking Wall Street's rally on Friday. On the economic calendar today, Australia's home loans data for February is out just before midday, with the expectation of a 2.25% rise in home loans month on month following a 4.6% drop in January, which will indicate a rebound in Aussie appetite for home loans as rate cuts are looking likely on the horizon. And now let's dive into some trading ideas for your consideration today. Bell Potter maintains a speculative buy rating on Mesoblast and have significantly increased the 12-month price target on the biotech company from 58 cents per share to $1.40 per share, following the FDA informing MSB that the available clinical data from its phase 3 study in children with steroid refractory acute graft versus host disease appears sufficient to support resubmission of the biological license application for remestemcel. Bell Potter's analyst sees the best estimate for approval of remestemcel is mid-August this year. And Trading Central has identified a bullish signal on NRW Holdings following the formation of a pattern over a period of 15 days, which is roughly the same amount of time the share price may rise from the close of $2.87 to the range of $3.10 to $3.16, according to standard principles of technical analysis. And that's all for this Monday. Have a wonderful day, and as always, happy investing.